This is askSlim Live, April 12th, 2022, information and support for traders and investors in a time of crisis and beyond. All right, let's do just a little bit of legal stuff right over here. This page is telling you that what we do is for entertainment and educational purposes only. It shouldn't be construed as investment advice, whether we do it as oral or live or video, and anything that you believe could be important to discuss because you want to do a trade or make an investment, you should discuss that with your financial professionals. The live events we do are held as support for members, not included in memberships. We do these special for you, and they've been created for a time of special needs. Note, these events are likely to be recorded, offered at askSlim.com website, and at times will be offered for public viewing. We can't guarantee that your identity will be protected, though we do everything that we can, and we don't give out your identity or information to anybody. Your participation in this event acknowledges that you understand and agree, and please refer to our terms, disclaimers, and full legal information at askSlim.com. We have three of the team here. Katie could not be with us today, so me, Slim, Matt, and Arvi. You want to get a little more information on us, you can go to the website, and we have a bio page on there that we're just developing, so you'll be able to check out there. The agenda for today, kind of a little more of a brief one than we normally have. I'll be giving you a brief look at the technical analysis of the stock indexes. Matt's going to go back and look at the cycle low timing tracker, which is getting a lot of interest. And he's going to give you a brief review of the newest features. There's some cool stuff on there. And then we're going to have our express round Q&A with the three of us, where you can ask us about our services, trade planning, chart analysis, trading issues, all of those things, general questions about how you engage in the market. And we'll do the best we can to help you with that. All right, so we're going to start out by looking at the stock market. Just a quick little discussion about what the market did today. Of course, you all know what the market did today, but it was somewhat of a, I would say, expected, in that we had shown that there was an important short-term or minor breakdown in the stock market that was suggestive of the fact that the market would go down still, and that rallies would fail. Now, today, everybody was looking for big numbers on the inflation report. So the market was getting sold for a few days based on that. It was kind of a sell the rumor and then buy the news, because all of a sudden there was relief. Okay, you know, we have 8.5% inflation, 40-year worst levels of inflation, 1.2% for the month. I mean, it can't get any worse, right? So it was kind of relief in thinking that, well, that's it. We've seen the worst of it, so we're just going to buy everything. So they did that for a brief period of time. We saw the S&Ps get up, what was it, near 50-ish, and then reverse all day long until they went to minus, and then they got sold pretty hard again to down 20-something, and pretty much couldn't pick their heads up after that. Part of, I think, what made the market get a little nervous was the oil market, which rebounded $6, more than 6% gain. And that was because a report came out in Russia that they're producing 1 million barrels less a day. Somehow it's based on their war. There's no war in their country. They're maybe just not sending it out. So the oil market got a big bounce, and the bond market on all of that got a relief bounce. For those of you that hadn't maybe noticed, for our level 2, 3, and 4 members, we sent out a big picture analysis on the bond market, interest rate market. This morning, a special report that I did that I thought was kind of important to bring, and I had a lot of emails that said, hey, it's time to start doing the big picture analysis again. So I started with the bond market. So hopefully you'll find that to be valuable. All right, let's look at the chart and take a look at the S&P 500. And this is, of course, the side-by-side view that I always show when I do Future Speak. Just raise your hand if this is the first time you've ever been in a live event here at askSlim. And there are no hands going up. There is a hand going up. There you go. There's a couple. So there are some people here that are brand new, so you get a feel for what we do, and please, you're invited to ask questions in the Q&A if you have any. So looking at the chart here, you'll see that on the weekly chart right over here, this represents the pullback we just had, and it's come down to the middle of some support. I'll blow that up in a second. And here's what it looks like on the daily chart. On the weekly chart, the momentum conditions are still looking pretty decent. Blow this up here. The reversal scout, which turned up just after this low, and a reversal scout is one of the primary things that I use to help me understand when you make a cycle bottom or a cycle peak. You can see the cycle peak in here, but only a little time left to go. The cycle peak here with a lot of time left to go, which fit into our scenario perfectly. And then in here, the bottom as it began to move up. So you have this moving down, but this is not that sensitive as the stock market pulls back. And it's only given up 50% so far of this rally. It really makes sense when you look at this, that once this correction of this advance is over with, it's going to try the upside again here at some point and then probably come down. Right now, you can see that there are two scenarios really given in here. One is that the green one, which takes you up to getting slightly above that level, somewhere out in this next rally, somewhere out here, that would be in this minor rising phase, or that it begins a stair-step downward move. And in all cases, we believe that when they get into an area of nesting down over here, or it gets into this next period of risk, that next period of risk will be somewhere right out over here, timing-wise, where you'll begin to get into where there's a lot of downside risk. That's under all the scenarios that we have right now, that's basically what it looks like. That's the highest probability based on the monthly pattern. And the fact that this is a negatively configured cycle, it gives you the highest probability that what will happen is that this next cycle will not make a new high, and that it will end up taking out this low and maybe severely on the downside. So that's the highest probability. When I look here at the daily chart here, there was a really good tell that we got from the stock market when we saw the this 14-day, which really took a long time, when that low came and you got a day-and-a-half rally, and then you came down and broke that low. That was the 17th day off of this low. Under almost all circumstances, that would mean to us that this second cycle was in place and already breaking down. So we believed when that happened that this was going to come down, and that this would be a bad signal here. And we said that last week, that we thought that this was not doing well and this would turn blue. That's exactly what happened. So now the momentum has neutralized in here, not turned negative yet, but that was, a really good indication when I saw that. I want you to look here at this 2-hour chart. Oh, that's not the 2-hour chart that I want to bring in. What did I do with that? I got this frozen. 1 second, please, to see what's frozen. Now we're back. So this is the 2-hour chart right over here. And when if you look at our multiple grids that we share all of the time on chart streams, you'll see the 2-hour that's actually live. And when this is the exact date right over here where that breakdown came, and you can see what happened was the 2-hour was giving you on the slim ribbon PO red negative, and then a resumption signal right over here. So all of this was supporting what we had believed was happening, in that the short-term momentum was turning negative, that the minor cycle had broken down, and it was likely that what would be happening would be that the market would be moving down during this period here to where it gets to the end of this cycle, this nested area. Then you have this big dominant cycle at play and this cycle right here kind of fighting each other. And what we would believe would be this minor cycle would rally, and I put that in here for you to see, and then come down again into this time frame. And then you get out over here, which is the resumption of this big move. If you hold the supports during this whole period, it's pretty likely that this rally out into from beginning of May out towards the end of May, which is what we've talked about on the weekly a number of times, will happen. And the way that shows up right in here is that the bottom comes here, you get a rally up here, and then you come down again. You get another rally up here, and then you start to get into some real trouble area. So that's how it resolves itself on the weekly there and on the daily. I can show you the daily NDX and on the Russell, and it was basically the same thing. You had in the Nasdaq, you had that breakdown that occurred after a 1.5 day rally right here, and it's continued down. Now, remember, this is a 14th day here. Usually when you run long, the next cycle will run short. So right now we've completed 7 days. That says to me maybe 3-4 more days of jogging around here on the downside, and then another attempted rally like I showed you on the S&P 500. The Russell RUT always has a mind of its own, and in this case, it is somewhat aligned, as you can see. Well, it looks like another few days right in here, but it broke down the same way that the other indexes did. It had a very good rally this morning and then gave the whole thing up, as you can see. So plenty of weakness in there. The slim ribbon on the bottom has turned negative there. So the slim ribbon PO, as you can see that. And that 2-hour chart is just really valuable. So I think it's important that you pay attention to that. And we offer it in several different ways. And especially for level 2, 3, and 4, it's live on our chart streams for you to see. And you can see all of those time frames that we broadcast for level 2, 3, and 4 on the S&P 500. And I think it's just an important thing to watch in conjunction if you're a day trader with the 15-minute chart on the SIR chart stream live grid. So that's a look at the stock market overall. I mean, just looking at it, I would say that you have 3-4 days of continued potential for lower lows, an attempted rally that is very likely to fail, and then probably coming down to these levels again. And then one more try at the highs we made, I think, is the highest probability. That's it, Matt. I'm going to turn it over to you.
All right. Thanks, Slim. Great analysis and instruction as usual. In this segment, I'm going to briefly provide an update of the newest features that have been just released in the latest version of our new cycle low timing tracker that's in beta. So as our members utilize this tool, as you have questions about this tool, please continue to provide feedback. You can do that by sending it to Matt at askSlim, or you can go even to the Discord server and you can post directly into, and I'll show that here in a minute, right into our cycle low timing tracker channel, the questions that you have, because your feedback is always helpful as we continue to build out these services for our members. All right, so I'm going to share my screen. Just a second here while I get this going. Okay. Harvey, do we see the cycle low timing tracker? All right. Okay. So what's new with the cycle low timing tracker? Well, what we've done here is two, I think, very key updates, enhancements with this new version that came out. And that is that we've added in a historical records tracker. So what that allow you to do is you can pick a date. So if I want to go back and I want to see, let's say, yesterday's tracker sheet, I can click on that and you'll see that it will populate what was the record for that prior day. Or if you pick the specific day, let's try the 7th of last week. It might only be starting to pick up because this is brand new. It might have started this week, but from this week moving on, you will have the historical records of the prior days. So that should be a very nice feature to be able to look back and do your own, thinking through in terms of past trade planning or wanting to see what was there yesterday. Katie is doing updates on the Discord channel as well, but this is a really nice way to get a handle on what those past trackers look like. So that is a helpful tool there. To go back into today's, you just select today's date, and that'll bring you back to today's tracker. And you'll want to be on today's tracker because the other really, really great, convenient, and effective new feature is that if you highlight a symbol, whether it is the weekly or the daily, and you click on the symbol, that is going to then open up a little tooltip here where you can click on the weekly and daily chart. So for those of you that are level 3, level 4 members, you have access to the cycle load timing tracker that is in your dashboard. And then when you're in the cycle load timing tracker and you again select a symbol, you can click on daily, and that will populate the daily chart. Click on the weekly, that'll populate the weekly chart. So you should be all set with now being able to access the charts in a very convenient fashion right from the cycle load timing tracker. So those are the two significant improvements that we have made based on feedback. There are more coming. So we'll probably do another sprint, another development sprint around this before we remove the beta. So again, if there are some really important you feel missing features, make sure to share them with us so that we can discuss those with the development team and consider those for future releases. So is there any questions that we can take with anyone regarding the cycle load timing tracker before we get into the overall Q&A?
I do see one there from GT. Why is Apple showing in the weekly timing window and bottom confirm both?
Well, what we do here is we show that there's a period of risk. So Apple has, I'll click on the, what was in the weekly? Okay, so let me look at this. So the timing window for Apple was in these timestamps here. So because it's still within that timing window, that's why it would still show in the tracker. Once it falls out of that timing window, then it will no longer appear in that period of risk. When it's in bottom confirmed, it means that there's been sufficient price action to suggest that anchor low is in place. So there's two progressions of the bottoming process that we evaluate. Well, actually, there's three phases to it. First is just the window, right? The window of time, which is the period of risk where you have really anything goes, but the likely scenario is that you have the downside risk, but you want to be aware of the fact that there is the new rising phase that is likely to start. So what we've implemented with the cycle load timing tracker is the ability for you to be notified when something shifts into the bottom pending, which means that there's been sufficient price action on typically multiple timeframes that would suggest to us that things are happening where now there's a likely anchor that is developing. That bottoming process is really in force. And then once we get the bottom confirmed, there's additional price action in a positive direction that would suggest that anchor low is in place. So that's the progression. And why is it in both? It's just simply because it's still within the timing window, as well as showing the sufficient price action.
Somebody's asking, what does the little red flag mean? The little flag.
Oh, these little flags are these flags here. These call out when there's notes. Katie puts notes in regarding each symbol that she feels would be of value. Some notes. So that's what those little flags are.
Mark is asking, can you give us some trade ideas using the cycle low tracker? We actually we don't give trade ideas on this in this live event. We do that for our level 3 and 4 members through the site. And so I would encourage you to look at that, and you can ask Katie if you're is it level 3 member that can ask Katie about the load tracker?
Yeah, level 3 can go into Discord. I'll show that in a second. And as we go here, we're going to have, that is of great interest, our trade planning live sessions to be able to ask questions like that on in particular, how to use a service. And so look for that. But like Slim said, you can write in on Discord, and I'd be happy to share some ideas around that. Just generally speaking, not formal trade ideas that we do. Here, I'll pull over the Discord. If you're not on Discord, you can write to Jason at askSlim.com, write to me or write to Arvi. and we'll make sure that Jason, who's our community director for Discord, is notified so we can add you on here. Our system will automatically pick you up, but it usually takes a few days for it to do that. So for whatever reason, if you were missed or if you're new, make sure you reach out. But there is, under the askSlim cycle load timing channel here, you can click on that, and that's where Katie makes updates in here, or questions can be asked regarding the cycle load timing tracker.
Good. M. Ford says that it doesn't render on the Safari browser. Have we tested it on that browser?
Yeah, unfortunately, Safari is a challenging environment to develop around when you're working with the data, all the data that we use that we have to embed into this WordPress site. So the compatible browsers are going to be the Chrome, they're going to be Edge, and Firefox typically.
Alexandra says, asks, are we considering adding more indexes and stocks, especially European?
I mean, we're always considering things. That, every new symbol is another leg of effort from the analyst team, because we really do a lot, or most of this work is manually, it's handcrafted. So it takes a lot to produce these pieces of technical tools. So we'll probably send out a survey here as we look to remove beta, and maybe we pick another handful of symbols that we might add to the list. We know that there are some futures from our current focus list that aren't on here. So if anything, we probably would stay within the focus list and then look to maybe move beyond that at some later time.
Right. Lisa's asking something I think that we just discussed, and there's, can the tickers either be red or green depending on the state of the cycle?
It's a great question, Lisa. And in the next version that we release, we are building in some algorithms to be able to identify the weekly, which will be generated based on an algorithm that we used for the ranking system, and so that will be color coded and based on that output. And then also same for daily, we're going to look to pull from our ranking system that we use over there to generate an output to give you a sense of directional bias. So yes, we will be color coding those based on a time tested set of inputs that we use already.
David says, can we add more energy stocks to the cycle timing tracker? But right now we're only doing the focus list and adding some futures. So I think that'll be a ways down the road.
Yeah, I mean, those are all great points. Our goal with a lot of this is to scale it. But again, it takes a lot of resource. It takes a lot of system development to be able to manage that. And we're in discussions to build to collaborate to be able to bring some more real-time opportunities in terms of data that would allow us to scale a lot of our methodology around some these pieces here. But like Slim said, it's probably a good 2-3 months down the road.
Very good. Okay, I don't see any more questions for you on there.
Okay, excellent.
All right, great work.
Yes, thanks. Yeah, it's a great product.
Yeah, amazing. To think about it, when I first started to work on my style of cycle analysis back in 1975 or 76 to where it's come to right now, I mean, it's just absolutely amazing with experts, like myself, able to create stuff like this. For me, it's mind-boggling. Of course, It's 47 years, a lot could happen. And Antonio's in that regard says, I want to thank you for the entire team for the hard work that we put in, and thank you. And that happens to really be very true. There's a question here actually for you, Matt. Maybe you want to grab this back. How would you use the SMI in the 15-minute and 2-hour charts?
Sure. Am I still showing my screen, or did you grab it?
No, back? I took it back.
That's all right. Let me just pull up the SPX here. I wonder if there's a better one. Let me just see what else we got.
You taking the chart? Take it back.
Yeah, I'm taking it back. Is this TLT? Is that what we see here?
Yeah.
Okay. So the question was regarding the SMI, so Stochastic Momentum Index. So how do we use it? We use it as a complementary there's two key ways that we use it. And we use it as a complementary directional bias tool. And then also we use it to get a sense of the momentum. Is it confirming? Is there divergence occurring? So what we would look for is when you have, for example, here, you can see how TLT is really, we use the -75 to 75 as our parameters. And when you have an oversold condition that just hangs there, that's typically negative. That's a negative sign. You can see how the slim ribbon PO is firing negative. So there's no indication right here. So this would help me understand that right now at this point, the overall momentum is still very weak in the TLT as an example. So this, you're asking about the 2 hour and then the 15 minute. It's on the daily as well. So we use the 75s again, the -75 and then the +75 give us a sense of the oversold and overbought. And it is helpful to see those happen, because a lot of times you'll get into those areas and you'll see a bounce off of them. And when you have the cross occur, then that's a confirmation of momentum change in one direction. And again, that's why we use it as a complementary. But those would be the two primary benefits of the SMI, is for a complementary directional bias, and then also to get a sense of momentum. Let me pull up the SPX to see if that gives us any other interesting tidbits here. And you can see here the weakness, the weak aspects of the SMI right now over the past like 10 days. A lot of times too, what you'll see is in terms of the 15-minute, a couple things that stand out to me right now is you can see the depth of this decline and the depth then of the momentum reading typically suggests to me, now you look at this and at first blush, you might say, oh, wow, this is really oversold. Well, it is, but it's also that's a very negative indication. It normally means when you have this duration below the oversold line, that there's more weakness to come overall. And we had a little divergence, we got a pop, but then right back down. And so a lot of times when the 15-minute gets up near that resistance line or that overbought line, and you have a dominant directional bias that is in the opposite direction, once you have that roll over the SMI, it's another tool or another signal to let you know, as part of the sum of the evidence, that we're likely to have a continuation. So that's what I usually look for, is if you have dominant direction and then the SMI was showing weakness already, and you get back close to the overbought level, and then you turn again, that there's a likelihood of a continuation. Is that anything else to add to that, RV?
No, I think that was really,
That was good.
I mean, very clear.
Trader answered, he said, I use it as a warning that the hull will shift and getting ready to trade in a new direction of the hull. So it's he uses it as an indication of that. It's a little bit ahead, but it could be a very good signal.
Yeah, it's more sensitive than our reversal scout. It's it's the most sensitive probably, but that's why we like to use it as a complementary. If you figure out ways for yourself to maximize its usage, that's fantastic. I mean, really, at the end of the day, technical analysis in these tools are designed to help give you an edge, for you to figure out what that edge is. And really, if you develop something that gives you an indication of the probability of, not a certainty, but a probability of one thing happening over another, and you can combine certain aspects, then you have a methodology that's working for you. And so that's what these grids are, as Slim says, at a glance, there's so much great information. Once you get a feel for them, you really can use these to help your trade planning and very quickly put some good pieces together in terms of direction, levels, and time.
Barry's asking, how do you establish the acceleration and support resistances on the 2 hour charts?
Wait, the acceleration zones are on the 15-minute.
But he's asking, how do you get them on the 2 hour?
Oh yeah, well, that's not an easy thing to do, because what we do with the 15-minute, that's handcrafted. We have a logic for it, but right now it's done manually. So that's not something that's going to come over to the 2 hour right now. But what you do have with the 2 hour, you do have these key levels, and you have the ribbon. The ribbon really is a great guide for support and resistance, especially when you have, so we have a dominant negative bias here, right? Reversal Scout gave you the first warning. Reversal Scout didn't go back positive at all. So that's why it's so helpful. And these supports and resistances we put in before or in advance. It's not after the fact. This is in advance. So you had the resistance here. Reversal Scout still negative. Didn't make much progress. SMI rolls over. And then here we have the slim ribbon turning negative, rally into the, what is this? The 21, right? On the EMA. Typically the bands here, the ribbons really act as either support and resistance. And then we had this next sell-off. And now we're in a key short-term support zone. As Slim mentioned, we're right near that 50 to 61.8. We're right in that zone. So, and you're starting to get these oversold readings here. We're getting close to that on the SMI and the daily. And you will probably, like Slim said, we're probably going to have some more downside, and then these will likely turn over and give you a rally. We'll see how far they go with it.
Okay, and traders also asking, can you use SPY or SPX? Well, for level 2 members, you're only going to see the SPX, right?
Yes. What was the other one?
He's asking for SPY, which we broadcast, but for level 3 and 4.
Yeah, level 3 and 4 get access to 8 other channels, which include the SPY, the QQQ, gold, so GLD, SLV, TLT, and then XLE. So it's a fantastic, for a trader. It's basically you really have a complete set there that you can work off of to give you a great picture of what's going on in various sectors or asset classes or whatever you want to call them, instruments.
Okay, I'll take it back then.
All right.
All right, great.
Yep.
All right, a few questions, a couple questions in here before I get into some of the charts, and Arby takes over on some of the charts also. Alexandria, you're asking a couple questions for dividends and dividend-oriented stocks and for how that affects cycles. We don't really do any work on dividends. We don't apply that to our analysis. We don't find that it is good correlations with cycle bottoms or peaks. So we're just not, that's not something that we pay any real attention to. There's a lot of other resources there for indications of market movements around dividend times, and it's kind of a funky time, and I don't really I haven't found good ways to use it other than trying to do dividend capture plays, which sometimes they work and sometimes they don't. So that's I don't think we can give you good support on dividend stuff. We have a question here from an anonymous attendee that says, it always throws my analysis off if the market forms a trough during a rising phase, like the one we just saw, and vice versa. Are there any tips or suggestions you can give me that might help identify what the markets, when it might be weak during a rising phase or strong during a falling phase? So I get a sense that you're looking at the cycle brackets as cycles, and that you're saying rising phase, declining phase based on what the cycle bracket says. The cycle bracket is simply a guide. The market action and how it acts around support, resistance, previous cycle peaks and bottoms are what really help us identify when a rising phase is ending. So recently, the stock market was in a rising phase. It had a little correction on the minor cycle. It started to go up and then came down and broke that previous low. You might be calling that falling in a rising phase. I call that an established declining phase. So it may be, around the understanding of cycles that there's some confusion. And based on your question, I really encourage you to take our cycle analysis workshop if you haven't yet. And if you have, and you have questions about it, you can send them to us at team@askSlim.com, and they'll get to me. But the question that you're asking really gives me a sense that it would really benefit you to do some more studying around how cycles work. Don't look at the cycle brackets on the bottom about anything other than just simply a guide for the ideal. If it rallied halfway and it sold off halfway, I mean, that's really what the ideal means. And then it's up to us as analysts to see how it varies from that. And the fact that it's varying from the ideal is what gives us the information. So that's really, I think, important. Let's take a look at what we're looking at here in charts. And we have about another 20-25 minutes to go. All right, I'm going to jump into some of these futures, and then I'll let you take it over, Arby. I see Facebook and some other Tesla. GDX.
Yep.
Yeah, okay. So let's take a look at TLT. Now, if you haven't watched the big picture analysis that I put out today, and somebody put out a message in here that I thought it was really good, and I thought it was too. I really encourage you to watch that. The big question is, why is this cycle running along? What is it that had the ideal right over here and it's continuing to fall? Now, you had a 2-week rally right over here in TLT and in the other futures in the 10s and 30s, and then came right down. Now you see this nest right over here. Now this is really understanding the nuances of cycle analysis. You see this great big cycle right over here. If this was a new cycle that ended after 2 weeks and began to come down, it would mean that this great big cycle here only had a 2-week rally. I don't think 1 in 100 would be the proper amount, odds for that to happen. You can see in here, as I look at all these harmonic families, that each of those large big cycles rallies for months and months. So what that said to me is that this extended decline really has to be living in the previous harmonic family, not the new one. And if that's the case, then I look at where the next possible low could be, and that is the potential low that we see in the daily chart that comes out right over here towards late April. So that would be another 2 or 3 weeks that we're looking at on the daily chart. Now I'll go over and look at the daily chart, and you'll see that it points over here. This is about a week and a half. So if that's the case, about a week and a half from now, and you can see the slim ribbon PO right over here, giving you all of this. I mean, it doesn't get any clearer than this. When you have a cycle bottom right over here, a breakdown of the cycle here, it says it's going to decline through this whole dominant cycle, and the slim ribbon negative here giving you resistance in the resistance zone, and these momentum resumption signals on the bottom. It just doesn't get any clearer than that. I mean, I don't know how you could use any studies that would say to you more that this was going to continue to decline. Right in here, you can see this vertical timeline and this timeline. That's the zone that we expect that the bottom would form in here. And that aligns with this bottom in the weekly that looks like it's shifted way over. And then what will happen is that once we get some sense that this has bottomed, and you can see it's coming down to the 100% fib extension way down over here. And once we get a sense for that, then the whole harmonic layout in here, this whole structure will change. It will shift to the right, and then we'll be able to project out for long periods of time. As a matter of fact, this is 88 weeks. This over here is 44 weeks right there. And then the smaller one right over here is 22 weeks. So we'll be projecting out those cycles once we get a bottom in here. This is a lot of teaching about the basics of cycles and also about how to deal with nuances and shifting. One of the 21 modules in the workshop talks about this. I think it's very important that if you're going to look at cycles, you can't just look at the bottom and say, well, this is rising, this says phasing, and in this you would say, well, it's declining in a rising phase. Well, it's not. It's declining in a declining phase because the rising phase has not yet been established. So we have to let the declining phase tell us that's happened, and that will happen through a series of events coming from the shortest term charts out to the longest term charts. The momentum on the daily will turn up before the reversal scout on the weekly will turn up. But we'll get this series of events that occurs that gives us that information. And that takes a little bit of time. So that's kind of a long answer on this TLT, but it really felt like it was something that was important based on some of the previous questions that we have in here. Likely to make this first attempt at this bottom in about a week or week and a half. So that is TLT. Natural gas. I'll raise your hand if you got on this natural gas trade that we've been talking about for days. Oh, wow, look at those hands going up. I am excited about that. Well, good for you. Whoops. Wow, a lot of hands going up. That's fantastic. So here's the natural gas right over here. We saw the cycle pattern here. This bottom right over here turned out to be very early. We thought that this rally was out of place and it would come down again, but it actually couldn't even come down to that same location. And then this early trough came right over there and they all began to turn up. And you saw by the magnitude of this advance that you only get a magnitude of this large impulse up usually when there are three. I said only and then usually, that's weird. Usually when you have 1, 2, 3 cycles pushing on the upside, then that will give you a lot of upside movement. When you have 1, 2, 3 cycles pushing on the downside, that gives you a lot of downside movement. Corrective phase or declining phases, rally phases right over here. And the market proving those to us. You can see the upward turn in momentum right over here. It then proved that there was cycle bottom forming in here, and then it began to move up. Our target was up in these 6s and maybe 7. This price right over here is just over 7 right over there. That was just a fantastic hit of that target. Based on the formation that we see in here, and of course, I'll cover this again in Future Speak tomorrow. It won't really change at all. Those rising phases, those support confluences in there. For those of you that don't know the difference between putting in support and support confluences, I list them as confluences when I'm not certain about the lows, when there's 2 lows that are very close. So I put them both in and then create the ranges on them, and that's how we get those confluences. And that calls for some kind of a pullback in here. If it gets down into this area, this is the 23 right there, about $6, that feels like a spot because there's not a lot of time to come down in here on the weekly. And then likely are going to pop up again to 7.5 for more. You know, you can thank the US for, at the time that the cycles were supposed to go up, for deciding that they were going to ship our natural gas over to Europe. And that really, really did this, because usually the cost of shipping is so high that just doesn't happen. But the cost of natural gas in Europe was so high that it made sense. So you can see in here, where did the slim ribbon turn positive? I mean, that's really the question. Where did you get the signal in here? Well, it's right over here. And then it rallied, and look at that secondary correction right over here with this low, how it comes down, tags the slim ribbon, and then it begins to widen again right over there. So just a great look at that. I don't know why the slim ribbon PO is acting funky down over here. You see that? That's weird. I have to check that out, why that's happening. So well, I don't know why that would happen in natural gas. There must be a bad tick in there somewhere. Anyway, you get an idea, momentum up, a cycle, phases rising and you get these big upward impulses. It was perfect. And I can't tell you how excited I am of all the hands went up of people that did really well on that trade. Eric says, awesome job on TLT also. Well, thank you for that, Eric. So let's take a look at the dollar, dollar sign DXY. Dollar, our target on the upside was par and a half that we had looked at. And it got up to closing on its high today at about par 30. So you can see it getting up there. Now I put a note in here for our level 3 and 4 members today. I just doubled that up. Let me remove that. That the monthly peak in interest rates is due in April. The dominant euro bottom is due mid-May. Those are important if you're trading the dollar, because when interest rates peak, it's very likely the dollar is going to peak, or the dollar will peak before that. The euro bottom, with the bottom with the euro being 57% of this index, is very important. So we have this projected up over here into May as the peak because of where I think the euro bottom is. So I'm always looking at those correlations. If you want to trade dollars and you want to even trade metals because you're looking at dollars, you have to look at the cycles on the euro also, because that all works together. Raise your hand if you pay attention to correlations. Okay, lots of hands going up. That's great. Put those hands down. Raise your hand if you don't pay attention to correlations, but now you believe it's important that you do. A lot of hands going up. Okay, we got that right. So that's good. So that was an important lesson for today. So that's a look at the dollar on the weekly. The dollar on the daily right over there looks like it's about to go into a correction, but then move up again based on this minor cycle. Look at the momentum in here in the slim ribbon PO. I mean, how it just told you about that. It continued to be strong. And just absolutely great messages there. I love the way it tagged the VTLs down over here and then moved sharply away from that. So I'm carrying them over here. I don't know if they'll be important or not. Actually, there's a steeper VTL that's now come into there. And I didn't put that on the chart. So let me just duplicate this. And from this cycle right over there to this cycle here, right up into the support. Let me just get that right on right there. That's that steeper VTL coming in and making tagging those cycle bottoms. So you get an idea of the importance of that support level right over there on the dollar. So great stuff. Love that. All right, so that's a look at the dollar. And are there any more futures in here?
Bitcoin Slim also.
Bitcoin. Okay, /BTC. Bitcoin is interesting because of the depth of the decline in here. You might remember that when I looked at this, I said I thought that what was forming was a bear flag, that this rising phase in this weekly cycle was making a bear flag, and that eventually when it resolved itself and got into that period of risk, May through July, that next yellow oval, that it would not have gotten through resistance, and that then it will be entering into a period for severe decline. I think that the best case that you can make is 30,000 coming out into June, July. There's a pretty good chance of getting down to 18,000 based on that big support on that super major 76.8 in there. And look at the nesting areas and where the cycles came down and those yellow ovals of the periods of risk. And when you look at that and you look right now at the failure at the resistance zone, you know the kind of trouble this is in. What is the probability of it going up and getting above resistance based on money flows that you see here versus breaking down and going down or hitting supports? I would say that risk reward is about 10-to-1 in favor of the downside based on historic cycle shapes and things that are embedded in my brain from 47 years looking at cycles. So the risk rewards are severely to the downside in here. This is the daily chart. I'm not on the right daily here. It's the wrong harmonics. There you go. This says maybe a few more days in here on this decline. It turned positive for a brief period of time, but it's been really choppy in the momentum. And when you have a slim ribbon that continually stays narrow and you see these arrows going up and down, you know momentum is not being able to be established. It finally got established here, but then gave it up so fast. Here it's trading down under the 78.6 of this minor cycle right in here. That says that this is likely to be an area it's going to fail from. Hence, it's a sell zone. That's why we list it that way. So that would be a high probability area to enter on the short side. And for those of you that are Bitcoin bulls that are looking at this, I mean, I can't make a bullish case out of this for you. And if anything, I hope that I'm giving you a reason to be cautious in here. I don't say sell out your position because I would never give you that advice. I could be wrong. I'm showing you the highest probabilities based on the sum of the evidence that we have in here in these charts. I call them very busy charts. People write to me or comment and said, your charts are spaghetti. What are you, an idiot? Well, no, if you learn to look at these, you really get a sense for the value and the meaning that is in all of these lines that you see in here. So that's a look at Bitcoin, and I hope that was really clear to you. Gold, I'll do gold and then give it to you, Arby. Here's the gold market. We've been looking for a continuation of the correction in here, though we raised the levels of supports and into that fib confluences around the 50 to the 61.8 is where we expect it to get down to in the next month or month and a half. And then based on this, the big patterns, all of that, there's very likely to be a very important bottom set. And then I think off to the races for the second half of the year. I've been saying that since the beginning of the year, that, you know, I thought that the best time would be the second half of the year. Actually, I think gold is doing very well right now, just holding up where it is. One more dip in here in this next month or two, and I think it's off to the races on the upside. Here you could see the pattern in here. You know, based on the daily pattern, which is a positively configured cycle, this big rally and this pullback into the support zone, the projection should be to test this high. But I have it right here where there are resistances, and our projection, even though I don't list it as a sell zone, is to not make the new high. So part of this teaching that I'm doing is to tell you why, and that is because we're in this phase on the weekly chart where it's likely to move to the downside. The probabilities of it being able to move through there are very small. So I don't list this, I don't have this projected up to that high, which would normally be the highest probability after a cycle, the previous cycle that formed this way. So we're looking for this, the dates right over here, when you look at this dominant cycle, are May 24th. That's where I think that important low is going to come. When I look at these cycles here, that is May 22nd, as you could see. That's May 22nd. So you can see there's synchronicity in the weekly and daily. If we have that all figured correctly, and this nesting going on here that is also in the daily brings the selling that we believe it will, there should be a long capitulation where they get sick of waiting and they throw them away. And that should be a great long side opportunity in the gold market, which I think is going to do very well later on. That's all I'm going to give to you right now. And I'm going to let Arvi take it over.
All right, Slim, thank you. Appreciate it. So let's just first walk through GDX because I saw that there was a question about that, and it really does tie in pretty well with what Slim just mentioned on gold. So let's just take a peek at GDX. So again, this is the weekly chart for GDX. This really overall favors a move back to new all-time highs going out into likely the fall, probably of this year. You can see we're not pulling back here at all. We're just basically making new highs versus that most recent high at 40.26. So again, just a little bit of a dip here going out into this May time period. And if that were to happen, that'll be a gift in my opinion. And then this is likely gonna work its way back to a move back over 46 over time here. This is a super strong pattern. The next key weekly low is due 425 to 530. So let's keep an eye on this, and we are watching this daily in terms of how this really bullish price action is really playing out. If you look at the daily chart again, fairly clean action here. Again, we have made a new high right here versus that prior high, right? So what we're looking for is for just a very minor high to form, get into a likely modest pullback down here into this next timing low, with that next low due 422 to 52. Now, this is a very positive look. So we would still look for a new high in this next move back to the upside here, which goes out into May, and then for this to pull back one more time. So this is still very positive in the minors. So if we look at the next low, that is really lining up pretty well with what we just heard in gold. That next key daily low here is due around 529. So very much in line with what we're looking for in gold. So a super strong pattern in GDX.
That's so interesting. And I got to tell you that there's so many times when I've traded gold, of course, since I first became a trader, there's so many times when the miners are ahead of it's like investors know there's a time coming up that they're going to be buying gold. So they're buying because of the leverage situation. As gold goes up, the earnings to the miners are affected in a leveraged way. I think they want to get ahead of it. They don't want to miss it.
That's right. That's right. I mean, look at just to show you one name, look at NEM, right? New all-time highs. I mean, this is just, it's just emphasizing this is obviously a huge miner, but still already pushing back to new all-time highs. It's kind of telling you what is likely to happen in gold, in my opinion, is that next big move back up, because you can see this super strong buying that's been coming in for weeks and weeks and weeks here in NEM. So just as a side note. Let's pull up Facebook, because there was a question about Facebook. Facebook is bearish, and you can see we had this bottom that formed here the week of 3-7, got into this rising phase, super bearish look here on the weekly. So we're getting a failure here versus this 238 level. We do have earnings coming up, but overall, we would look for a new low to form going out into the summer. And that's versus that 186.11 period here. So likely a little bit of more kind of range trade here, and then watch for this to get some selling going out into that time period right here, which is the later part of the summer. So definitely a bearish overall weekly look here in Facebook. Daily cycles, again, getting a modest pullback so far, forming a higher low versus that prior low. So what we look for is for this to likely hold this zone from around 205 to 210, then get into that next rally period here. We do have earnings. So as we've seen here, obviously anything can happen on earnings, but we're looking for that to then get a little bit of a pop back to the upside and just be more or less range bound here for a period of time. If we shift over to Tesla, Tesla looks really quite range bound here also. You can see that we moved down, sold off, formed our low here the week of 221, got into that rally period, now had a failure here versus that 1129-ish area, and really backing off. So do we get a move like this where we have these series of lower highs and lower lows, and then roll back down? Note when that next key weekly low is due. That next key weekly low is due 622.81. So looking more or less range bound here as well in Tesla after just a monster move for many years. And obviously this does happen over time. You can see these areas here where we just kind of chop around. So that may be happening here in Tesla on the longer time frame. If you shift over to the daily chart, again, what we're looking at here is overall for rallies to likely fail going out into this period right here, which is right around that end of April to early May time period. So looking for little moves like that, and then for this to roll back down into that time period. On the downside, we have a level right around 925. I think that's really quite reasonable. Obviously, we do have earnings coming up here, and last I looked, it was around a $100 move is what they're looking for in Facebook. So we'll have to see what happens there, but kind of looking for a bit of wide range, but overall a movement to the downside here in Facebook in the short term. If we shift to the next one, there was a question on Nvidia. Nvidia is really pretty interesting. You can see we are seeing some signs of an early high that has already formed here. Okay. You can see we had this nice failure. I was actually looking for this to get through that zone, but it ended up failing right at that zone at around 290 and getting this sharp move down. And if we use our fib tool, there was a level at 224.25. We have now moved through that level. We have our key weekly low at 206.50. If that were to go, it would say there is risk going out into the summer here, and a likely major high has formed in Nvidia. What are our levels? Let's use our fib tool here, and we will measure those levels from prior highs to prior lows. And we have a zone from 179 to around 150. That would be our zone on the downside going out into that time period. So not a good picture in Nvidia. Daily chart, again, looking back at that key low here, not a good look. We do have a low due 411 to 419. So let's watch for a more modest rally than I had last updated here. So a move like this, you can see a little bit of a rally, and then we'll be watching for a move back on the short side here in Nvidia on this next rally period right here. So
that looks like a short side trading idea coming on that one.
Yes, we are watching this one. So,
yes,
for sure.
Absolutely. Very good. I think we covered all the stocks then, right? There's a question from Alexandria on the DAX, but we don't normally do the DAX. So sorry about that, Alexandria. And I'll just, okay, I think you're done with that, Harvey.
All right, sounds good.
Thank you. Good job.
Thank you.
And what else do we have in here? Ron, you were asking about the May FOMC meeting and that coinciding with cycles. I don't think it really does line up. The date of the May FOMC is May 3rd and 4th. And that May 4th would be when the news comes out. So I don't really see a lot of correlation between the Fed and cycle action. Maybe if you look at that and you can point some stuff out to us, I'd love to see it. John says, I'm not yet on Thinkorswim. I trade on Tastyworks for the moment. That's my old buddies. And I noticed you had a Q&A about Thinkorswim for level 4 and level 4 plus. Is there a recording of that? Guys, do you know what he's referring to?
I think so, Slim. RV and I, and then separately, we've done some Q&As for level 4 and level 4 plus. So I can, if John wants to message me on Discord or send me an email, I can send those to him so he can take a look at our level 4 tours.
Yeah, he says he's level 3 and waits till he has more experience before stepping up. And of course, we always agree that, you should move, you should move at the proper pace for yourself.
Yeah.
And you would know that. Rashmi wants to know, do you think we have peak short-term in oil due to the SPR by USA and others? I don't really buy that the SPR has that much effect. It's a temporary Band-Aid. I think it's stupid the way they used it. And on a short-term basis, there's still room on the upside. I'm not going to pull the chart up now. I think the resistances were up in the 110, 112 area. So on a short-term basis, I don't think so. But on an intermediate, longer-term basis, I do think we saw a peak for quite a long period of time. And I think we covered them all. All right, that's it. I want to remind everybody that this is where you write if you have questions about any aspect of askSlim.com, and the sending to me directly when you have a problem with your membership is just going to get a slow response because I don't get to the stuff that quickly. So please do send any membership or website issues over to the team, and then you can see and hear what everybody else covers in the work that they do. Great show, guys. Really appreciate it. Alexandria says, thank you for your amazing work. And thank you for that, Alexandria. And I agree with you. Guys, great work. What do you got to say?
Great
I think
show.
our community of
Yep.
our community is just, in terms of traders and technical analysis enthusiasts is getting stronger, better, more knowledgeable. You can really see it happening on Discord with the questions that we get, and it's a lot of fun. You know, we challenge each other in a positive way, and we work our tails off to bring, you know, world-class analysis, and the back and forth is a lot of fun that we have with our members.
Yeah, love that you guys are doing that so well, and there's so much participation.
Yeah, it was. I think we have a really great group that just loves what they do, and I'm happy to be on your team. So
Absolutely.
yeah.
All right, everybody. So we'll see you in a couple of weeks. Have a great holiday weekend. Market week will be on Thursday this week. See you then.
Take care. Bye-bye.
Bye-bye.
Bye.